Okay, welcome to week 10 of 2025. This is our first March session, I guess. And yeah, we've got lots of fun stuff and data to look at. And then we'll take a look at that. We'll do our usual just top two idiots of the week. Uh, and we'll do that live in just a second. Lots of fun market stuff to go over. We'll definitely do our usual index overview and we'll look at the latest in the Heidenberg, Pullman, and stock breadth indicators. And of course, we'll take a look at Jeffrey Hirsch's data for the month. And then we'll take a look at stock charts, sector rotation, fun things there. And then we'll get into our current events. So lots of fun things there. And on earnings, we'll take a look at Best Buy and some other fun tickers. Oh, this is slightly old. Let's get rid of this. And then we'll take a look at our usual counterparty with Wall Street bets. And pivoting to the core news cycle, we've got lots of fun macro news we'll talk about. We'll look at the latest in the Beige Book from the Fed. So that's one of 8 issues. And we'll take a look at the latest sector surveys. It's looking optimistic there, but we'll definitely talk tariffs. I got some nice charts to look at the winners and losers for individual tickers, at least related to the tariff stuff. So we'll take a look at that in just a bit. And then on the Black Swan front, we don't quite have anything to go down, but on the theaters of war side, definitely lots of insanity, really. We got South Korean bullshits. It was a drill that went wrong. And then we have some blowback from the northern side of the DMZ. And we'll talk shenanigans of Zelensky and him acting a fool. And yeah, looks like he's capitulating pretty quickly. So we'll see the latest there. And we got serious boots on the ground deployed to guard the Rio Grande. We'll take a look at that. And other fun central banking news, ECB cut rates. So they've broadcasted that fairly well, so no surprises there. And we'll take a look at fun domestic news, and of course shenanigans between our Attorney General and freaking Cash Patel. So I don't know who to blame more, the Nothing Burger or Cash Patel trying to not play hooky at home. Like, I don't get it. This doesn't look like a true believer doesn't act like this. Like, I don't get it. But yeah, we'll take a look at the latest with reptile poison as well, and more pain for consumer cyclicals and consumer discretionary. So we'll take a look at that. And yeah, we'll look at agency cutoffs from the Doge team. And one of our famous retailers is getting acquired by, I think, Sycamore Capital. So we'll take a look at that as well. And of course, in Portland, there's mass dysentery and I think other fun things. And we're having fires ablaze in the Carolinas. So holy shit. And pivoting to real estate news, let's see, we'll take a look at the home builders ETF in just a bit. But yes, we'll take a look at Florida HOAs and how that's freaking going insane over there. So they had a lot of deferred maintenance and had to be brought up to code immediately. So yeah, so much for the Florida real estate boom. And then pivoting to semiconductors, we have lots of updates here. So we'll take a look at latest power shortfall in Texas. We'll talk SpaceX for a second. And I got a really nice chart on the AI CapEx relative to past boom and bust cycles in sort of the internet's saga, really. So some fun charts there we'll take a look at. And Singapore is kind of making some inroads to stopping Chinese middlemen actions, but I don't know if they can turn down the almighty dollar there. Yeah. And then we'll take a look at Intel's somewhat resurrection attempts at least. And then pivoting to labor news, lots of fun stuff with Doge demolition. So yeah, they have lost at least 64,000 jobs. So holy cow, good times. And DEI is also blowing up for Disney. So we'll take a look at their charts and look at in a while. And no doubt both those camps are showing up in the latest um, uh, ADP figures here. Cool. And then pivoting to international news, obviously we have some more data on tariffs. We'll take a look at that. And then the DAX has lost its steam. So we can talk Germany for a second. And then pivoting to oil news, we're seeing Brent crash to 2021 lows at the moment. So inventory is building up and still no update on the SPR. So baloney there. But yeah, let's see. Russia has also done more business with the EU than the Ukraine. So kind of funny. And we'll talk Venezuela and the latest in part of, I guess, Trump foreign relations and oil plays. So Exxon definitely winning and Chevron catching stray bullets. And then pivoting to metals news, we'll take a look at the trade deficit and repatriation of our gold stocks is well underway. So we'll take a look at those figures. And we'll definitely talk China. And holy shit, China is freaking out over tariffs. And we'll definitely talk China tech. And we'll look at the latest in the Belt and Road, I guess, shenanigans. And Pakistan is the latest to catch some major issues there. But we're slowly beating back the presence of the Belt and Road. And I mean, no one's a fan of BlackRock, but I guess better that BlackRock owns part of this port than at least China, I guess. But yeah, we'll take a look at that. And we just saw the PRC and one of their national big congressional meetings. So we'll take a look at some updates there. And here's a fun Freedom House report on the Freedom Index. So exciting there. So we'll take a look at their 9 out of 100 score. All right, cool. Questions, comments? Let's kick off as usual with the poll. All right, so you should see on your screen the poll. So let me know where you think the market will go by next Thursday. AII, meanwhile. About the session notes for the new folks. Okay. All right, got a couple votes. All right, let me share the results. Okay, so we're spread nice and evenly. 33% bullish, 33% sideways, and 33% bearish. Okay, cool. And let's take a look at the American Association of Individual Investors. Historically, this is one of the worst, most bearish reads in a while. I have another chart that shows better historical data we'll look at just a bit. But let's see. Question of the week. What has changed in your approach to investing? I've become more conservative and cautious. I've become more conservative, no changes. I switched around some investments. I became more aggressive. So yeah, overall, people are freaking out. So rightly so. All right, excellent. Let's see if our meeting is announced for month end. Yeah, I forgot what the other gentleman's name is, but I'll be presenting commodities for an hour. So definitely talking precious metals, of course, among other key commodities. All right, cool. And let's do our fun idiot of the week. We'll just do the top two per the group sentiment. So yeah, let's see. Top loser of the week. Okay. All right, perfect. Got an NVIDIA guy, and let's take a look. Got the screenshot here. All right, let's do NVIDIA really quick first. Oh, this guy's perfect. He deleted his post. So where's NVIDIA at right now? 111. Holy shit. He's lost everything. And this expired on the 25th. So yeah, game over. 305K. Holy shit. Wow, RIP. Yeah, wow, okay. Game over. Yeah, NVIDIA at 111.
Okay.
Nuts.
Okay. Oh,
Oh, is that Aries?
yeah. The
All right. Second loser of the week. Let's see, what did this guy do? Bonji 1337. Let's see. Uh NVIDIA, oh my God, 122 calls expiring March 25th. He has some time at least, but I'm sure the data decay is making him pretty nervous every single day. So yeah, we got our two NVIDIA boneheads. And yeah, all right, good times. All right, we'll leave that there. All right.
Hey, stop. No.
Oh, pardon me, Kurt. Just to mute you for a second. All right.
Sorry about that.
No worries. Let's go to our index overview. And we'll start with our S&P 500, and we'll start with the futures and the supposed smart one. We'll work our way down. Let's see who else just joined momentarily ago. Not sure, but let me just drop the session notes one more time, just in case. And again, my apologies for the poor audio. Trying to not be too loud and get myself kicked out of the Starbucks. All right, let's get our handy dandy analytics here. Let's look at really. Oh, look at the big chart up. Okay. All right, let's start with the S&P 500 and let's look at the ES. So yes, generally speaking, it's a red day. Put call ratio should look fairly normal for ES at least. So yeah, it's right on the money around 1.6. And as we know before, the smart guys like to pick up cheap hedges on on red days and then cash them in. Sorry, on green days, yeah, to pick up cheap hedges and then cash them in on red days like today. And if we look at the SPX, we should get the actual operating put call ratio for the day. So that's 1.14. So yeah, that's nice and optimistic compared to our baseline of 1.3. And the sleepy deltas or the bearish deltas are pretty much asleep at 55%. So nothing urgent and definitely no knife falling, at least at the moment. And with that, let's put the SPY, see how retail should be. We're dancing with that 200-day moving average right here, testing that. Looks like retail is shedding weight. Lots of net selling looks like since after Valentine's Day. Okay, so gap put call ratio also about one. So fair value is about 1.3. So a smidge bullish. People trying to buy the dip, and bearish delta is very sleepy. So yeah, retail looks like they're buying into this BFD action, I guess. Let's pivot to NQ. Go to the NASDAQ side. All right, 0.888. Okay. Let's pivot to NDX. X. This will be a little bit more useful. I still haven't figured out the baseline figures for the NASDAQ futures yet. Okay, 0.97 here. And sorry, bearish delta's at 59%. Oh, looks like this board finally woke up. We'll let that load in the corner. All right, so 0.978 at least for preparation for NVX. And if swap will cooperate, let's pivot to the Qs and see what the retail side of the house is looking like for our tech heavy sector here. So offhand, lots of outflows. We're well below the zero line. It's pacing the SPY for that sort of post-Valentine's Day high. And let's see. Today is 0.908. So fair value against about 1.3. So yeah, people are definitely bullish today and buying into the dip despite the sort of collapse and in both inflows and yeah. Uh And yeah, moment of truth right here, testing the 200-day moving average as well in the NASDAQ. So yeah, let's pivot to the Russell 2K. And let's go to the IWM and see how that's shaking out. So with small caps leading the way, we've broken the 200-day moving average and we're about to hit the 500-day. And let's see, today is 1.76 on the put call ratio. So fair value here is about 2.3. So this is relatively speaking bullish. And we can see confirmation from the bearish delta on the 0 to 20 side, so 21% of the action. But do the charts justify more bullish investment? Not really. And we can see we last touched the zero line around late January, and it's just been outflow city since then. So this has been a ride in contrast to a lot of Jeffrey Hirsch's stock almanac data we'll take a look at in just a second on small caps. But yeah, just keep this figure in the back of your head. All right, cool. And before we forget, let's take a look at the diamonds and see how that's shaking up. This is typically our most optimistic index, and kudos to Larry for teaching us Bubba Horowitz's index rotation strategy with this. But yeah, even today, 1.76, that's uncharacteristically bearish for a famously optimistic index. So kind of some divergent indicators here. The bearish delta is pretty sleepy, but there's significantly more puts overall. So yeah, not the best time for the diamonds. And VIX is 24.41. So that's definitely up there. Let's go to the VIX charts real quick. Is Ross here? He was having some VIX questions from last session. Oh, KS is here. Welcome. Drop the session notes for you folks, just in case you're popping in. But yeah, here's the VIX blow up. And I think it might be a little bit late to get in, but I still feel like there's some more of a volatility storm coming up. But we're kind of reaching that I guess intra-year peak, as it were, of 25-ish. Good time still.
I don't think this is a max, but it really creeps me out when you act like that's a stock.
Oh no, it's not. I'm just saying, yeah, I'm just watching for more blips up.
Yeah. I mean, when you say, "Oh, well, the big trend," I'm like, don't say it like that. That's
No, you're right. You're right.
it's
This is
like an
just
indicator. It's not a stock.
no. Of course, of course. All right. And let's go to CNN's Heidelberg Omen and market breadth indicator. And for their aggregate fear and greed scores, 17 today, 21 yesterday, 44 a month ago, a week ago at 18, and a year ago at 72. So we're kind of off the seasonality roadmap here, and we're kind of in our own beast. And yeah, we're on extreme fear here. We've broken through the buffer zone, and we've crossed the 125-day moving average. And that's not the most optimistic of patterns forming here either. And pivoting to the 52-week extremes for the New York Exchange, this is comparing 52-week highs versus 52-week lows and seeing what's left over. And lots of companies just at mostly 52-week lows overall. And part of that market breadth figure shows up in the McKellen index. And yeah, outside the Max 7 again, lots of folks hurting out there. So yeah, nice and bearish here. And let's go to our read for March from Jeffrey Hirsch's team. Let's see. Mid-month strength and late month, sorry, mid-month strength and late month weakness are most stepping above. Recent record, S&P is up 13, down 8. Rather turbulent recent years with wild fluctuations and large gains. And losses. March 2020, Dow declined 13.7%, worse March loss since 1938. March has been taking some mean and the quarter hits, such as 1469 Dow points down on March 22nd, 2001. And then last 3 or 4 days, Dow a net loser, 22 out of the last 34 years. And NASDAQ was hit hard in '01, down 14.5% after a 22.4% drop in February. Second worst NASDAQ month during presidential election years, and third down month to gain 1,000 points in 2016. So serious potential for fireworks. So both to hold our breath. And just peeking forward into April, let's see, April is still the best Dow month. April 1999 was the first month to ever gain 1,000 Dow points. Blah, blah, blah. Up 16 straight years from '06 to 21. April 2020, Dow was up 11%, the best April since 1938, and it exhibits strength after tax deadline in recent years. Stocks anticipate great first quarter earnings by rising sharply before earnings are reported rather than after. Rarely a dangerous month. Recent exceptions are '02, '04, '05, '22, and the barely 6 months of the year ends with April in presidential election years. April's since 1950 averages 1.5% for the Dow, 1.3% for the S&P, and 0.9% for the NASDAQ. And end of April, NASDAQ strength fades. Okay. We have to survive March to get to April, but yeah, good to know. And then again, here's our sort of overall SPX seasonality. And again, shout out to Ross for getting us the sharper post-presidential election year. So we are right here, kind of. So in theory, it should be improving, in theory. Terrorists aside, of course. And who just joined us? Oh, welcome, Gary. Let me share the notes one more time for you. Cool, yeah, grab the notes in the chat. All right, so yeah, let's go to our sector rotation and we'll do this live. We'll get the weekly and the daily readouts. Let's delete last week's screenshots here. So we got our weekly candles, sorry, weekly tails here. We're running 5-week tails. And let's zoom out a little bit and look at the table view. Losers include consumer discretionary, no doubt eggs are in here. Consumer staples doing better, real estate, at least momentarily, healthcare, materials, energy, and then other losers include tech, of course. Okay, grab this screenshot for my notes. Switch this to daily. Let's see how this changes. Okay, that's a little bit more surgical. So let's see the table. So in this case, we see healthcare and consumer staples and materials leading this sector. Let's add this to our notes. Put this on the date side. Okay, perfect. And let's get to our individual tickers. And I got our running list. If anyone has any favorites, please let me know. Add it to here. That's for weekly first. All right, yeah, leading the pack. Chinese stuff, Widowmaker, Supermicro, and losers include Tesla, SoundHound, Riot, DJT, Coinbase, Gush, Mara, Cathie Woods, Amazon, and Google, and Advanced Money Destroyer. Screenshot for you. Any other tickers you guys want me to throw in here? You get the daily version. Okay, there we go. A little more surgical. All right, so dailies, MicroStrategies, Mara, a little 2xer Chinese, natural gas, more Chinese stuff. And then top loser on the dailies would be Upstart, Gush, Supermicro, and Neo. Interesting. Questions, comments, other tickers you guys want me dropping? No? We can circle back if there's anything urgent.
So,
Take a look at the Nifty 50.
Nifty 50. Can I see that here? Let's
Not
see.
doing so well.
India. Here we go. Yeah, lots of losers in the Nifty 50. Holy cow, I don't recognize most of these, but yeah. And then I have index sector indexes here.
you move to weeklies. That's gonna push you out to, I don't know, Christmas, I guess.
Well, here's dailies then. So that looks a little bit smoother. Only extreme of 9 and 8%.
I still think these are really cool, just so you know.
Yeah, yeah.
I'm doing things with it offline.
Yeah. No, glad to hear. Yeah, let's see if we get a better view of the Nifty 50. Yeah, here's the 1 year. So relative peak of end of September. Here we go. From a 5 year point of view, yeah, giving up a lot of gains. And on a month, yeah, slipping. Right. Cool. Other questions, comments? Let's go to earnings. Take a look at that. Look at Best Buy in just a second. Looks like today we got a couple of big hitters: Costco, Broadcom, HP, Smith and Wesson. My first love, I guess. And yep, and then what else tomorrow? Don't recognize a lot of these. Okay, looks like most of it will be this afternoon. Cool. Let's talk Best Buy. All right, so obviously, if you're Best Buy and you're selling overpriced electronics to the masses, tariffs are going to hurt you if you're sourcing most of your goods from outside the U.S. So let's see. Where's our quotes? We expect our vendors across our entire assortment will pass along some level of fairer costs on retailers, making price increases for American consumers highly likely. So obviously that's a weaker guidance. And let's go to the chart, see how the market is responding. All right, here's BBY. Beautiful gap down. Let's see. It's been in kind of sell-off zone for a while. And now we're well below the 200 and 500-day moving average. And call ratio is 0.7, a bit on the bearish side, but not as bearish as it could be or should be, relatively speaking. So yeah, we can keep our eye on this, and it might be time to maybe also set up some new wave shorts because I don't see the situation improving. But then again, 4D chess with tariffs could get a little tricky. Let's take a look at our counterpart. All right, so today's top tickers are Lunar, Tesla, Nvidia, MicroStrategies. Is this Warren? Oh, this is war in general. All right, Q, Spotify, Apple. I forgot what this was. GLD, Broadcom, ASTS, AMD, Google, Robinhood. Is this Wendy's? BTC, Talking Eggs. Gap has earnings. Supermicro, pretty red there. QQQQ, Here's T-Mobile and a little bit of Intel. Okay, interesting. Oops, oh, let me grab a screenshot of that actually. Just in case you guys can use this. All right, cool. And let's get to our macro news cycle. Yeah, and again, considering where NVIDIA's at right now, let's just go back to the chart. It's at 111, and I'm glad we've been foreshadowing this disastrous earnings for quite a while. And I'm glad, hopefully no one went long on this. Probably our former court jester did, but yeah. So yeah, 110 now. Holy cow. And what would Fluff say? There's support here at 112 from back in May. But yeah, we could blow that out pretty quickly. So yeah. And yeah, and remember, retail got really greedy for that last earnings report and then promptly got their heads shaved. So yeah, it's the JFK haircut, right? A little bit off the top. All right, let's take a look at the beige book from the Fed. This comes out 8 times a year. And let's see, let's just look at just the quick highlights. Consumer spending has decreased, price sensitivity, especially lower income shoppers. No surprises there. We're having some climate issues, especially with crops and whatnot. And let's see, vehicle sales were modestly lower. Manufacturing had slight increases. Contract manufacturing pending trade policy changes. And what else? Banking activity slightly higher, and residential real estate markets were mixed. Construction activity has declined, and commodity prices might spike due to tariffs. So nothing that we didn't already know. Okay. Just leave that as that. Yeah, surveys were a little bit optimistic. We'll just leave that as that. That's just the key takeaway. Let's get into the funner stuff. So here's a nice readout from the JP Morgan quant and analysts legions here. So where's our fun handy dandy chart? So here's ES at the moment, relatively speaking, right? So seeing a nice kind of very sharp dead cat bounce into hell. And here's our Atlanta Fed with a potential recessional mention. And finally, someone's woken up and picking up the coffee. But yeah, here's the former historical AAII chart that I mentioned earlier. And we haven't seen this bearish level since 1987. So yeah, that's where we are. So we should be a little bit nervous. This buy and hold cohort is panicking, and rightly so. So yeah, keep that back of your head. Let's just drop this next to our AAII sentiment section from today at least. All right. Here we go. There we go. Cool. Okay, that's the key chart there. And then let's talk. We don't have time to unpack everything else, but there's lots of cool stuff. Oh yeah. Well, here's the defensive single stocks that I was mentioning. They make it so blurry and grainy, but yeah, I haven't parsed through this in its entirety, but I think it's an interesting, at least, watch list to start with. So yeah, check that out. And then here's some good pairs trades I mentioned here. So yeah, this kind of makes sense. 2x against the NASDAQ. From a sector rotation stuff we just saw, this would make sense too. This makes sense to me as well. I haven't looked into utilities and energy. Not quite sure what IG credit is, but yeah. All right, cool. Okay, let's get to trade war. All right. And again, this is in your notes. So yeah, here's the overall list of tariffs currently. So here's the status, I guess. Let's see, where are we? 3, 4. So we have Canada, Mexico. Canada's pissed. And let's see, we got major exporters coming up on 312. 4-2, we got European stuff coming up. And yeah, here's some other stuff towards the fall. And Dr. Copper right here as well. Okay, so those are the current state. And then here's a projection against at least by sector for a potential spike here. And the cutoff's right about here. So yeah. So the big question is on the other side, when are reciprocal tariffs going to be activated? So we'll see how that shakes up. And we'll talk China in just a second. Okay. There's some other good verbiage here, but we'll skip that a little bit. We don't quite have time to unpack everything. All right, cool. Black Swan list, nothing's changed. It's more been still on the fears of war. So let's get to that. Again, what the hell was going on with South Korean military drills? Live bombs were dropped near the border on a South Korean town. What the hell? People got hurt. Like, I don't know what's going on. But yeah, the real power behind the North Korean throne is not pleased that we have a carrier strike group there. So exciting times. And lots of fireworks at the White House between Zelensky and ironically, an actual military shipment was turned around. So it seems like we're really going to force this peace one way or another. And the Zelensky grift will end. And no doubt he's terrified. And then along the Rio Grande, as mentioned earlier, we have boots on the ground. So that's exciting. Questions, comments? Let's pivot to central bank news. And let's take a look at our US dollar strength. All right, so we had a substantial drop, which has nicely buoyed commodity asset prices. But yeah, we saw 107 give way to about 104, significant three-handle drop since last week. So yeah, about almost 3% down on the week and about 4% on the month. So wow, no doubt this helps a little bit with other assets. But yeah, dollar is weakening. And as mentioned earlier, ECB has reduced rates as well and is projected to do more as well. And the favorite term is meaningfully less restrictive. So that's exciting. Questions, comments? All right, cool. Let's get to domestic news. And again, lots of BS from our Attorney General and Mr. Kash Patel. Like, again, if you're a true believer, you're going to drain the swamp. What is this negotiating with work from home BS? Like, I just don't get it. And again, I don't think Cash has the gumption to really do what's necessary. So yeah, we'll see how this shakes up. But yeah, it's not looking good right now. And that Epstein dump was quite the nothing burger. And it's not like what's her name, Bodhi, or whatever her name is. Like, of course, people are going to give you the runaround. Like, what were you expecting? But yeah, it's just really stupid.
She screwed up.
Yeah.
She personally should have been looking at those 200 pages the night that they arrived and known that they were bullshit the next morning.
Right. And it's all at phase one and all this other stuff. It's just
Yeah, well,
like, it's just showboating with nothing.
she acted like a bureaucrat, and clearly hasn't done the work for a really long time.
Maybe she's the fall guy or fall woman in this case.
No, I think she's just been she's had a staff of 20 people and she would assign things to people. She doesn't have a staff or I don't know what, but you could scan 200 pages in a few seconds. I mean, God, I looked at the PDF for 20 minutes and decided that it was a problem.
Right, everything's redacted. It's black everything.
Well, not only that, it's just there's no meat. You know, I scrolled through and I was looking for something solid and it was just nothing.
So yeah, just don't hold your breath if you're expecting justice. Like the swamp is just too dark and too deep.
Well, I mean, if nothing else, they should have OCR'd all of the the handwritten stuff from the logs and, just had it in text. I mean, I should have just been able to go to a page and say, oh, I don't have to read all this handwritten bullshit. We've spent the time to turn it back into text in an Excel spreadsheet like format.
Yeah.
I don't know. It's just lame.
Fair enough. But yeah, Cash Patel's not acting well. All right. Now onward to more optimistic news like American obesity.
I'm excited to see every time they say that this is going to kill people. I cheer.
It's a self-correcting problem.
Well, yeah, but the problem is, and I'm really hot on this one. This is a real problem. And my computer probably needs to be rebooted. The problem is that 1/3 of the population of the United States are fat, and if they all go on this drug, and trust me, I looked at the data. Medicare authorized paying $1,200 a month for the drug. So you think about it, if even 50 million people go on the drug, it's going to break our piggy bank. We can't spend $1 trillion per year on fucking fat people drugs.
What percentage is obese?
1/3.
37. Yeah, 1/3 exactly.
Yeah, 1/3.
World average 13.1. Let's see. The Polynesians kind of win. Yeah.
Well, even if it's only 1 out of 5, it's a huge number. You can't have 20 million people on a drug that costs about $30,000 a year. Or no, I guess about $20,000 a year.
Good times. And don't forget, 1 in 20 has stomach paralysis. So think of a kidney stone, but it's the size of your stomach. So,
Yeah, there was a new one. I didn't save it.
yeah, nuts. All right, good times. All right. And then no surprises. Target is not thrilled. And if you guys have caught, at least online, there's been lots of economic boycotts. Target is definitely on the list. There's a bunch of different timelines. It's kind of region specific. I didn't really care to pull up those details, but let's just take a look at Target on the charts. And as you can see, it's been in kind of sell-off territory as well for a while, since last year. It's been below the zero line overall. So Target's not having a good time. So yeah, boycott won't be great for them either. What else? Fund Doge cuts by agency. We don't have to get too mired into the weeds, but yeah, USA, Department of Treasury, Education, Homeland Security, General Services, Social Security, Health and Human Services, Agriculture, Labor, and State. So yeah, we got a long way to go to hit 2 trillion. Holy cow. And then Walgreens is getting sold into the private equity world. And yeah, it's gonna be probably taken off the market. And let's take a look at its charts. WPA. This is WPA, right? Yeah, Walgreens. So yeah, $10 at the moment. Dancing right at its 200-day moving average. Okay, well, kind of Walgreens has like the worst of all worlds. It has convenience store pricing, but it's a giant pharmacy and it has uber retail space. It's a complicated way to do business. And what did KS say? If there is a similar Black Monday 1987 crash now, where would you buy a protection in SPY, NASDAQ, also like a inexpensive Delta strike? Yeah, good question, KS. If we have a rip your face off rally, I guess even faster than getting a hedge there is just going long the VIX, right? And then you could, there's different ways to finance a hedge, right? You can just buy a straight on puts, sell a credit spread, you can sell butterflies. It kind of depends on what kind of risk curve you want and the duration. But yeah, I think everyone's hedging strategy kind of depends. I mean, you can beta weight your whole portfolio and then get, SPX as a hedge or whatever counterparty you want. Dave, any thoughts on KS's question on potentially hedging for a rip your face off collapse?
Um, yeah, Edward prototyped this back in 2018. You buy way out of the money VXX calls, and they cost nothing, and then when VIX goes to 50, they shoot up.
Yeah, we're kind of getting there right now.
Yeah, I didn't look at VXX. I know it was down about 3% just yesterday, which is a lot of money on a $50 stock. Um, the yeah. So basically, if you want to play that game, then you buy calls way out of the money where they're cheap, and you just sort of leave them there all the time. And the problem is that it's like insurance. I mean, basically, you're buying this lottery ticket that one out of 1,000 times it'll pay off.
Yeah.
But you need a huge move is the problem.
Yeah. So you kind of got to prepare for this. Like, yeah. Does that make sense, KS? Or any follow-up question, comment? Okay, no worries. Shout out to Portland. They have swamp butts. Oh, KS is asking, why don't you buy a put? You can buy a put if you're milking like reversion, like market overreacts and has, the attention span of a goldfish. So like right now, it'll be kind of milking the reversion back to less anxiety-ridden levels. So I guess the initial rip your face off rally, sorry, not collapse, VIX will spike. So that's why you go long the VIX. And then after that's over, you can milk the reversion.
So when you buy a put, it's just simple linear math, and when you use VIX, it's actually exponential. Does that make sense?
Yes.
Yeah. So I mean, if you have a big blowout, you're just going to go down a certain amount on with the puts, and yeah, you get a payoff, but potentially your $1 investment can go to 200 in VIX.
Right. They're not equals. They're not equal
Yeah,
bets.
it's not simple linear, it's exponential.
Yeah. In absolute value terms, it's distant from zero. It's not the same. And then the poor South Carolina, frozen, and now there's fires. And FEMA, hopefully Trump has like cleaned this up. I have no idea. All right, let's talk real estate for a second. We'll look at ITB in just a bit. Let's grab a screenshot. So this was last week, 98.7. Again, this is our home builders ETF. Has the developers, Home Depot's, Lowe's, all that good stuff in here. So let's take a look. It's up at the moment relative to last week, but we're still in a major sell-off mode here. So it hasn't really improved. It's been a staircase down consistently. So, and then here we're testing the 200 days, right? We're testing the 500-day moving average now. And we'll see how the test concludes. So, yeah, interesting moment in time for home builders. Let's drop the screenshot here. And again, yeah, Florida has a new, this is written poorly, by the way. My apologies. Towns don't issue ordinances on this home. It's the homeowners association in this town that spiked their HOA fees up to high three figures, relatively speaking, because all the deferred maintenance has to be remedied now due to the statewide legislation. So yeah, my apologies, it's written poorly, but yeah, so much for the Florida real estate bill. And inventory's been exploding there. I don't quite have a chart, but yeah. Okay, let's pivot to semi-active commuters. Check that out. All right, let's take a look at Texas. Well, this diagram shows up later in our CapEx article, but we'll just take a look at it right now. So this is aggregate cloud spending for capital expenditures. So we got the Mag 7 or Mag 5 in this case, or Fantastic 5 or 4, I guess. Yeah, Microsoft, Google, Amazon, and Meta. So here's the sort of individual expenditures, and then here's the collective aggregate. So yeah, we're at 213 Billy, and we'll below it to 264 and then 296. All right, let's move back to the vertical. Sorry. But yeah, all those NVIDIA GPUs require a lot of power. So they need up to 99 gigawatts. And God, that's going to be a terrifying amount to get online. So yeah, we're going to see nuclear proliferation go mainstream finally. All right. Kind of a nothing burger with SpaceX, not really tradable, so we'll let that go. But Tesla sales have been horrific on a global scale. There's so much backlash. And let's just take a look at Tesla's charts for a second. So yeah, outflow city and substantial unpopularity. I believe he's down. So it's down 33% or something. Let's see. Yeah, here we go. 26%. And this is from February 27th. So this is probably even worse today. But yeah, not good for Tesla. And let's take a look at our ratio. It is 0.853 right now, so pretty bearish as well. So, and it's broken the 200-day moving average and it's dancing towards the 500-day. So yeah, a nice fun short here. And we looked at CapEx momentarily, but let's double check if there's something else we missed. Here's a different line bar graph format. Kind of nice to see. And oh, this is a nice separation. Private sector versus government. Government is the lighter one here. So not scary at all. Oh, this is from Japan. My apologies. Japanese government versus private sector. Government expenditures have crossed the threshold in 03. So yeah, not a bubble at all. All right, good times there. This isn't really actionable, but yeah, we'll keep an eyeball on NVIDIA fallout. Let's take a look at improvements with Intel. I wonder if the board misses Pat now. But yeah, Intel has definitely seen better days, but pretty choppy at the moment still. We'll have to hold our breath. But yeah, kind of crazy charts here. What's the call ratio for Intel? 0.513. Okay. But yeah, at least there's somewhat positive legislation, and I guess Intel still is a national security issue somewhat. All right, questions, comments? All right, let's take a look at fun labor news. And again, I love this meme. You know, shout out to what's the movie again? Office Space. All right. And let's take a look at Doge shenanigans. So again, it's huge spike in layoffs, and as from our previous timelines and meetings, we've discussed the spike in DC home sales, people looking for offshore bank accounts, criminal defense lawyers, leech bids, and what else? Just unemployment filings as well. So nothing but but good things, I guess. But yeah, we're seeing those numbers finally hit formal job reports now. And yeah, government, big time. So all these long-term grifters, cooking multiple contracts, work from home. It's just nuts. We have to bring back the guillotine. All right. Good times there. And then Disney has been blowing up. Let's look at their charts. So dancing at the zero line overall, and not quite the pure collapse that I've envisioned, but yeah, it's kind of trading sideways, relatively speaking. PCR is about 0.56. So kind of a mixed bag, but yeah, I think it has better days behind it, and we're forming a nice double top kind of and triple bottom, kind of a clean M pattern, not that clean, but yeah, being inverted W at least. And adjacent to our poor job news is ADP also confirming what we're seeing. So that's nice. Questions, comments on labor? All right, let's talk international news. And let's talk Mexico for a second. Peso spikes as Trump confirms Mexico is exempt from tariff on USMCA compliant goods until April the 2nd. And let's take a look at our soft Mexico short here. So slight bump up at the moment, but yeah, we'll see how this plays out. And we haven't looked at the emerging markets. Let's take a look at EPM. And with the weaker dollar, these guys should be buoyed up in theory. And we are kind of seeing that in the short term. Okay. But let's just double check what iShares thinks EEM holdings are. So I wonder if their weighting has changed. So it looks like they do a top 10. Let's go to holdings. Where's holdings? Okay. So EEM, oh, they do it weird. All right. Taiwan, Semiconductor, Tencent, Alibaba, Samsung, Xiaomi. It's very China centric. Holy shit. I didn't realize they did it like this. I thought they'd be playing country specific ETFs instead of individual tickers. Interesting. Okay, so it's very commie centric. What a disaster. Okay. BlackRock, you're disgusting. No surprises. Okay. Well, that's Mexico for you. And then we talked about the DAX. Let's get a nice chart of the DAX.
Okay, I know that. I'll CC you and Chen and I'll get.
I guess it's time to take profits. So, yeah. Right. Questions, comments on international tickers? All right, let's pivot to oil news. Let's go through. Let's fill up our chart first. Okay. All right. Here's crude for you. 66 bucks. Yeah. XLE folks are not having not having the greatest time. And we're seeing pretty significant outflows in the near term. And at these prices, we should be definitely refilling the strategic petroleum reserve, but we're not. It's just unfortunate. This isn't quite tradable, but I thought this headline would be important. But we should talk Venezuela for a second. And this is relatively this is related to blowback from Venezuela not being willing to play ball with Trump on the sort of illegal situation, prisoner situation. So this is both oil news and I guess southern border immigration related as well. So yeah, Venezuela has I think what the third or fourth largest reserve on this side of the hemisphere. So yeah, it is significant.
I don't know if that's your.
So yeah, or Chevron, cash and trade bullets.
Um,
I guess a good pair trade would be to go long Exxon and short Chevron. We should take a look at that. Let's talk metals for a second. Gold is 29.15 and 32.65 for silver. We might see 3,000 gold probably in a couple weeks if the dollar stays where it is or it gets a little bit weaker. And as we mentioned earlier, people are taking physical delivery, and we are trying to repatriate some stuff. And then this is kind of like my favorite French statesman, Charles de Gaulle, General Charles de Gaulle, excuse me. France was repatriating its gold back in the 50s, and so do we as well. So here's the different imports, exports, and you can see this large surge in maroon as base metals clad, sorry, base metals. Here, just it's a better, sorry. It's hard to see this. It's base metals clad in silver or I can't, it's hard to see. Oh, sorry, gold. Gold, including plated, platinum plated, and something. But yeah, so here's the gold component, and then here's the silver component and base metals. So yeah, pretty significant. And what's our gold silver ratio at 89.3? So yeah, overall, gold and silver are moving too much respective to each other against the dollar. All right, let's take a look at the China side of the house. We're still at relative the 3,300 mark, but overall, we've been chomping at the 3,000 mark for a very long time. As you can see, yeah, for 15 straight years, it was at 3,000. So shitty as performance. Yeah, let's zoom out and take a look at FXI. And Chinese tech is on fire, ironically, as Main Street explodes. But yeah, let's zoom in. Let's look at all those different bail-ins. So bail-in 1, 2, 3. Here's DeepSeek, and then here's the current, I guess everything. RMB devaluation, and then just bubble-esque activity, and the expansion of more debt to solve debt-related problems, like good job, Beijing. But yeah, this is just forming a higher scaffold to hang themselves with. And let's look at K-Web, and then we'll take a look at C-Web for the 2Xer. So K-Web is also flying high, but not as high as the first bail-in, as you can see. And we should see confirmation on the 2X C-Web. And yeah, we're seeing the exact same thing, but definitely inflows at the moment. So yeah, Chinese tech stocks are flavor of the month. But again, we've talked about this before, it's a bifurcated market. So while tech might be positive, Chinese EVs are a different story. So like here's NIO, right? The Shanghai-based EV company. I guess you can call them number 4, number 5's EV or EV-wise in China. And then let's take a look at the other one. Here's Li Auto, which is given up a lot of gains. And you can also see sort of the bail-in calendar here. And we're seeing nice the sort of the appropriate candles, right? Doji, 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 Evening Star. So, and then we got our earnings coming up. What is this? 314. Okay, should be a disaster, depending which set of books they decide to report on. And let's take a look at our Panda Tech watch list just to get a better snapshot of what else is happening. So as we saw earlier, Tencent is a big dog in the EEM ETF. But yeah, there's some other folks, and yeah, everyone's not having a great time overall. Oh, Baidu, we didn't look at in a while. Let's take a look at Baidu. So yeah, Baidu, while is enjoying the boost, it's also been giving ground for a long time. So yeah, the Google clone is not having a great day. Okay, so that's the overall FXI C-Web, K-Web situation. But yeah, Walmart's obviously not thrilled about tariffs. Let's take a look at Walmart. So much for Sam Walton's first book. What was it called? Made in America. Yeah, nothing really at Walmart 3 in America these days. But yeah, let's see. We're right at the zero line with inflows and outflows. So yeah, kind of a hiccup situation. Everyone's holding their breath. And yeah, we'll have to see if tariffs will be here to stay, or if there's retaliation from our partners, or if we double down some more. God knows what's going to happen. What's our put call ratio? 0.884, so pretty bearish for Walmart actually. So yeah, investors are not thrilled. All right, let's take a little slightly deeper look at Chinese tech. What's the chart I want to show you guys? Oh, here we go. So comparing Chinese tech versus the NASDAQ. Bubble versus bubble, which one's bigger? So uh yeah, this cannot last. This just yeah. Both will return to their intrinsic value much lower. So yeah, I just want to show you guys this chart. All right, and then taking a look at the Belt and Road Initiative, all kinds of stuff falling apart. And I guess you could call this China's attempt at imperialism. But a super third world country, bullying other smaller third world countries, that's a recipe for mass corruption and disaster. So, as we're seeing with Bangladesh's collapse this year, or actually last year, we might see some more instability come down the pipeline. So, um, this also piggybacks off the unwinding in Central and South America for Belt and Road Initiative. So looks like it's sort of the total war concepts from an economic standpoint here with sea routes and so forth. So yeah, we'll have to keep our eye on this. Okay, and yeah, mentioned this earlier, BlackRock is purchasing back a Hong Kong operated port, and formally it's through the HK Hutchinson Holdings, but everything out of Hong Kong now is a Beijing conglomerate. So yeah, just more shenanigans all across the board. So yeah, we'll have to see what happens. Cool, guys. Well, that's all I had prepared for you guys. Oh yeah, sorry. Forgot to talk about the latest political bureau reports. Okay. There's just some interesting GDP figures. Again, we don't have to read too much into it because we know a lot of these are Fugazi figures. Um, but yes, supposedly, China's projections were right in line, and it's kind of like the FBI investigating itself and finding nothing abnormal. So, uh, I don't know what else to say. China's still smoking their socks. Like it's just your psycho ex-girlfriend, still crying wolf all day long. For the good, bad, and ugly economic news. It's just retarded. I just don't know why they would maintain this charade, to this extent. Yeah, it's nuts. And to round things out, again, you didn't know there's not a lot of freedom in China.
So fucking.
Just, oops, sorry, misclicking. So yes, key complaints are treatment of ethnic minorities like Uyghur Muslims, the Tibetans. Yeah, things like forced sterilization and mass prison camps is not good for business. So yeah, good times there. And how is the market doing since we started? Looks like it's gotten like slightly worse. But yeah, we can look at anything else you guys want to check out or do our sector rotation tool. Um, questions, comments? And again, my apologies for the poor audio today. Let's take a look at the NASDAQ. Yep. Stop the recording for now.